So yeah, thanks for everybody for being here. I'm Derek, the Executive Director of Walworth County Economic Development Alliance. We're based in Elkhorn on the Geneva Technical College campus. We have one loan fund, and we wanted to talk about that and remind people about that, but we thought, hey, we work with a lot of other partners that have alternative funding sources, and there's a lot of bankers and other business consultants and things that we work with. Just thought it'd be a good time to get everybody together, talk about the program, some of the updates, get to meet some of the personalities here, and talk questions, answers, that kind of thing. So the agenda here really will be, I'll start off, talk briefly about our loan program, just some of the key points. I've got some handouts on the table about it, and then each of the speakers will talk about their programs and a little bit how we all work together. So before I get started though, I do want to thank Harbor Shores for providing the space for us. It was very nice of them to do that. It's a nice space. Also want to thank Simple Food Group for the food, for helping make that happen, and Tom Hartz is here, so really appreciate that. Can't wait to dig in, but I'm going to wait to do that till I get done here. So thank you for that. We are videotaping this too, just so that either if you missed something and you want to replay it, you can, but also it's nice. Sometimes people say, oh, I missed it, I'd like to see it, so we'll post that on our website, and you can share that with other people as well. So we're going to get started. So I'll just try to sit down here and go through our program first. We just have one loan program that we had established in 2008 through the USDA. They have a rural, they had at that time a rural program called HELP, which is Hometown Entrepreneurial Loan Program. It was set up for small businesses under $1 million in revenue, and it's really more, probably the best way that I would say it's either more of a gap piece, or if they're not quite bankable, they may be able to qualify for our loan. So maybe their credit score is not, great, but it's not terrible. Maybe they don't have quite enough collateral to get a traditional bank loan. Sometimes we'll also work with banks to help fund something. So if the bank says, hey, we're able to give them 50, they need another 25, sometimes we'll do that. Typically, we're looking for some job creation that's part of that, and just a rule of thumb, it's not hard and fast, but about $25,000 per job created. Now, if it's a startup, we typically would say, okay, you're creating your own job there, that's one, and it's usually over a 3-year period. So if they say, yeah, within the next couple of years, we may add another 1 or 2. We've done loans up to 100, but typically the loans have been 50 or less, and probably the average is about 25,000. Process, we typically would meet with our budget and finance committee once we've gotten all the information and review that. That sometimes takes at least 30 days just to get the information and then get it to a committee meeting, and sometimes there's more information that's needed, so it's probably about 60 days probably normally. Sometimes we can speed that up, or if we're working with another institution that's done some of the information they're willing to share, we can get that done. We've worked with like startup, small manufacturing companies, a lot of retail, just businesses maybe that are trying to expand a little bit. Most of our referrals, honestly, come from banks, and so we do have a lot of bankers in here, and wanted to partly do this just to remind you that we have this and that we can work together. And some of the others here will talk about that as well. Trying to think what else, but it's right now we don't have much out in terms of the loan. we've had as many as, I think, 6 loans at one time, but in the last couple of years they've kind of been paid off, and it's been a bit of a dry spell for us. So partly the reason we wanted to kind of do something like this to get the word out. In terms of the rate, we typically are about 0.5% to 1.5%, could be even a little bit more, but above what maybe a traditional bank loan would be. So it's not a low cost loan fund, it's really more of just helping somebody that either can't get a traditional loan or needs a traditional loan. And so, like I said, we have the sheet here. There's a link to our website where you can see that with application. We like to work with other partners, and so we have 3 here that we'll be talking with, and they have a lot more options and different ways that they partner and stuff like that. I guess the only other thing that I would say is when we do get either small businesses in or startups, a lot of times I will meet with them just to kind of go through and sort out what they're doing. I'm sure a lot of you get the same thing when you get somebody coming in with a startup, or if they want to expand. They may have 10 different areas that they want to go, and they want to try to do them all at once. So try to weed that out a little bit and tease that out, I should say, and say, okay, let's get a plan. Maybe focus on these 1 or 2 things first, and then phase it in. We have a lot of partners that we can utilize too for help with business plans or other business consulting. We primarily will use the Small Business Development Center up at Whitewater for helping with business plans and things like that. Also have we have a SCORE representative, Earl Humphrey, who represents the area, who will meet with people, and then certainly Heather at WWBIC and some of the others. And so, that's typically how our process works. We're willing to, help in any way we can. Really, what our thought is if they're not bankable by a traditional bank, if we can help get them going, they have 1 or 2 years of history, good history, then they can pay off our loan. There's no early payment fees, penalty fees or anything, and they can move on, and then we can use those funds for other startups or small businesses that can't get funding. So we're really not looking to compete with the banks or the other agencies, really just hopefully a good resource. So that's really, we're gonna have question and answer, I think, at the end, unless somebody really has a burning question. You can certainly ask right now, but I thought once we get through everybody talking about their programs, and we'll open up for question and answer, and then we'll have just some time at the end, hopefully, for some networking. So really pleased. I appreciate our other guest speakers being here today. To my immediate left here is Wes Walsh. He's with Business Lending Partners, which is part of Racine County Economic Development. And I know in the past we've at least worked together, definitely refer people, but do a lot of SBA lending, right? But you have other products. So I'd love to just have you talk a little bit about some of your programs, maybe what's new, how you partner, and do that. So
sure.
Thanks again for being here.
Yeah, thanks, Derek. Hey everybody, I'm Wes Walsh. I'm a loan officer with BLP or RCEDC. You might know us by either name. We go by different names depending on where we're doing business, so I always have to make sure to click the right email when I'm emailing people. So RCEDC is Racine County Economic Development Corporation, obviously Racine County focused. And then we go by BLP because we also offer the SB 504 program statewide. So we just don't want to be working on a project in Green Bay and call ourselves Racine County and confuse the heck out of people. So that's a broad overview on our organization. We are sort of a blend of of WCEDA and WBD up here. So we fit in the middle ground. We kind of do everything, which makes me kind of envious as you're talking. I wish I had one loan program I could focus on. But we've got two primary categories. I guess before I get into the loan programs, we also have grant programs, and this is specific to Racine County. We've got a few different communities that offer specific grant programs, and then we've got a county-wide matching grant program as well. There's, of course, different eligibility criteria for each one, but if you've got something going on in Racine County, I know we're not all that far away here. We do have grant programs. They change all the time, so just reach out to one of us, and we can let you know what somebody might be eligible for. And then getting into the loan programs, there's two broad categories. We have a number of revolving loan funds, like Derek was talking about, and then we also do that SBA 504 program, like Mark does. So starting with the RLFs. That's revolving loan fund lingo. I don't know if we use that abbreviation yet. We're probably gonna have an overwhelming amount of acronyms up here between all of us,
including our names.
Right. So the RLFs that we offer fit a little bit of a different niche than what Derek was talking about, in that we're typically providing below market rates on that financing, and therefore we're being a little bit more selective with the types of projects we're getting into. So we have pretty similar credit criteria as a bank would have, but the niche that we're looking to fill is taking a little bit more collateral risk that a bank would be comfortable with, but having similar credit risk characteristics. So we do some work with startups, but it's more existing businesses that we work with. And we're looking to finance primarily projects centered around real estate and equipment investment. And specifically then why we get called in most of the time is to help reduce the borrower's down payment. So we can finance up to 90% of the total cost in most scenarios. And that's similar to the SBA 504 program as well. So they both fit that lower down payment kind of criteria, and that's one of the major reasons people give us a call. And then, for the banks locally in Racine County, especially that know us, they know the type of pricing that we can offer. We're usually about 150 basis points over the 5-year treasury yield. So right now that's like 5.7%. For the bankers in this room, I don't think raise your hand if you're offering below 5.75 on a 5-year rate. No hands. So that's a big benefit for the borrowers too. So what we're looking to do primarily is get projects done that wouldn't otherwise get done, and offer beneficial financing terms to help keep the cash flow for those businesses. And we've got over $4 million in dry powder ready to lend in Racine County right now. So we have tons of capacity for those projects. And we're really looking to do more lending in that respect. So now that we're through that niche of Racine County, for people who don't do anything over there, you're like, shut up and get about the 504 stuff. So 504 program, and I'm sure between Mark and I, we'll cover absolutely everything about the program. So I'll start super broad. So it's an SBA program, a federal program, and organizations like DLP and WBD are essentially licensed to administer the program on behalf of SBA. And we are the two CDCs, certified development companies, that are licensed in the state of Wisconsin. So I'd like you to call me, Mark would probably like you to call him. But either way, we're looking to grow the pie overall on this SBA program. It's an awesome program. It's heavily utilized, and our job is just to remind people that it exists, because there are so many scenarios that we'll get a call and the question will be, yeah, does this make sense to go 504? Like, as long as it's eligible, what do you think, Mark?
Yeah.
90% of them, it benefits somebody to have 504.
Absolutely.
Yeah.
Absolutely.
So lower down payment, like I said, usually a 10% down payment. the rates on 504 have been falling. It's just over 6% for a 25-year fixed rate on 504 notes now. So that's, again, just huge advantage to the borrowers in terms of cash flow savings and locking that rate in long term. And then, the other piece I failed to mention of the RLFs, it's similar to 504. The way we operate our RLFs is that the bank typically we're usually partnering with a bank. Bank would provide roughly 50% of the financing. We do roughly 40%, and that's where that 10% down payment comes from. So usually it's that partnership with the bank. So that also helps the bank obviously limit their exposure if it's a little bit riskier project. So maybe that's the number one reason that we get calls, because again, most of our projects are referred from banks. So if it's a project that's maybe just a little bit risky from a collateral perspective, that using the 504 program can put it over the edge. Yeah, I won't go too long about that, or Mark won't have anything to say.
I'm fine. You keep talking. I don't have to. So.
Okay. All right, I'll pass it off, and again, unless anybody has a burning question.
Our next speaker here is Heather, and so she's with WWBIC, I should say, talking acronyms, right? The Wisconsin Women's Business Initiative Corporation, which also works with male-owned businesses too. Does a lot of education, and certainly they have a lot of different loan type programs. And really, I was thinking about that in terms of startups. I think it's really hard, like I said, ours isn't really well suited for a startup. It sounds like West Years isn't either. And I feel like WWBIC probably has been the best source that I've found that has been able to at least help some of the startups too. So hopefully you'll address that. But I know, Heather, WWBIC would like to have more of a presence in Walworth County in different ways. So hopefully we'll talk a little bit about that, but thanks for being here.
Thank you. So my name's Heather Lux, and I am the regional director for the Southeast region, and then I also serve as the statewide director of training. So WWBIC has been around since 1987. I don't know how many of you are familiar with WWBIC. I know Arlene is on our loan committee, so she might have some interesting information to share too. But nonprofit CDFI, serving the state of Wisconsin. We have 6 different locations throughout the state. The Southeast region here really covers Racine County, Kenosha County, Walworth County, Rock County, and Greene County. So we kind of go all the way down that Illinois border. And definitely would like to gain even more traction here. We do have loan clients and Kiva clients, as well as education clients out here, but we see a huge opportunity. So happy to be here today. Just starting a little bit from a different aspect. So Derek brought up the startup phase, and I know we have a lot of bankers in the room, so just want to share that one of the things that WWBIC does is we provide training. And it's really for existing and startup businesses, but often when people are looking to start a business, they might not have a business plan, right? So a lot of our referrals for lending comes from our banking partners. We don't compete with the banks or any of our other partners. We want people to start at the bank, but then we receive a lot of referrals back. So just sharing from a training perspective, startup businesses, we do a 9-week series called Building Out a Business Plan. Very intensive, once a week, 3 hours. Typically our clients in that training are startup businesses that maybe have never run a business before, never written a business plan before. So, need work on their business acumen and really understanding the plan, especially the financials and projections. But that is a tool. So if you're working with somebody that needs that assistance, please refer them to us. We offer that online on an ongoing basis, and then we also offer it in person as long as the demand is there to support it. We also have a tool called Initiate Portal, which was actually developed by Northern Initiatives, which is another CDFI in Michigan. Has tons of startup resources on there. So again, if you have that entrepreneur walk in that really needs help just in that learning phase, business plan development, business model, all of that, we have many tools. So both of those are free. So let me just back up a little bit and share that WWBIC's mission is really doors open to everybody, but our focus is on underserved populations. So historically, and as Derek brought up, women is in our name. We opened, during the women's movement, when women literally couldn't go into a bank and access a loan without a partner, a husband, somebody co-signing for them. We've really grown through that CDFI development to really work with all underserved populations. So a lot of our outreach is around that. So I just want to make sure that everyone knows we do work with men and women alike. I get that question all the time. Just historically, we started as a women's business center. So really that training component is one thing that we do. We also offer a full catalog, full spectrum of trainings for, again, startup, exploring entrepreneurship, and then existing business owners. From a loan program standpoint, we have WWBIC loans go up to $350,000. Our average loan size is still right around $50,000 in that micro range. And we are different than a bank. So we do look at credit scores differently. We're often able to look at different financial situations, collateral differently. Our goal is to help that entrepreneur get started and then to work with them, one-on-one consulting, through the life of their loan and hopefully get them able to be refinanced with the bank. So that's where that banking partnership evolves. You refer them to us, they get the loan. We have small business consultants that work with every loan client through the life of their loan. At any point in time, if they're able to be bankable, we want them to refinance so there's no penalties or expense around that. We actually celebrate that. So that's the WWBIC loans. We are largely, our largest supporter is the SBA, so we do microloans and community advantage loans at WWBIC. I hate sharing interest rate. Typically, we're at prime plus 5%. So again, taking a lot more risk. That being said, we have many different pockets of funding. So for example, we have a veterans loan fund, which is a lower interest rate. We have some revolving loan funds with cities and counties and different federal funding sources. So what our loan officers will do is they will, depending on the client, where the business is located, if they're a veteran, all these different things, right? They piece together that loan in the best way that they can to get the best interest rate that they can. Payment is typically over 6 years, but we can go up to 10 years. So one of the things we get asked a lot is, do you do real estate? And that's challenging for us, I just wanna throw that out there. That's usually when we contact our partners. Because we had the longest, that we can stretch that history, that repayment over is 10 years, the payment is often too much for a small business owner to take on. So that is our challenge. It's not that we can't do it, it just really has to make sense from that standpoint. So that's our WWBIC loan program. Then we also have a Kiva Hub, and I have to do a huge shout out to WBD because WBD actually funds our small business, our access to capital manager for Kiva. So we have somebody out of our Southeast office working with our Kiva clients. Is everybody familiar with Kiva, or should I do a quick intro? Okay, so Kiva is a crowdfunding platform specific to small business owners. Really started not in the United States, and I believe it was in 2006 that it came to the United States. It's an incredible resource. We often see our most vulnerable entrepreneurs starting with a Kiva loan. They might not even be quite ready for a WWBIC loan. Or we have clients that are startup that might piece together a Kiva loan with a WWBIC loan. But really 0% interest rate up to $15,000. Crowd-funded. Again, it's a unique platform specific to business owners only. WWBIC really kind of saw our president really had a unique vision around this, and that it's not competitive with WWBIC loans. It really serves those entrepreneurs that aren't ready even for a WWBIC loan, right? But we have seen it work. Kiva loan, start a business, come back, access more capital through WWBIC, grown, and then are bankable. So we've seen these, again, often the most vulnerable startup, never run a business, never access capital, never got a loan before, go through this process and successfully grown a business. So I love Kiva. I mean, if you get a chance, go to kiva.org and take a look, because it's an amazing.
KIV.
KIVA. I do have flyers and catalogs and everything with me, so if anyone is interested in learning more. But it really is a great resource. The other thing that I love about Kiva is typically someone doesn't get $15,000 the first time. Again, these are typically entrepreneurs that have never accessed capital before. So really learning what it's like to apply for a loan, right? To ask for that money, to repay, all of that. Once that loan is repaid, they can reapply, and as long as they're in good standing, it almost always at least doubles. So this can grow as a resource for that small business owner too. So that's Kiva. And then I also want to mention that we do have a Veterans Business Outreach Center under our umbrella. So again, underserved populations, that is also funded by the SBA. We do have a loan fund specific to veterans that is at, I believe it's at 5% right now. So again, it's just a matter of our loan officers looking at the client that they're serving and piecing together in a way that makes the most sense.
Heather, can you just talk about the Kiva a little bit more too? Because I know I've tried to promote that in a number of cases, and then it's, you know, because there's that social crowdfunding aspect, and I think you're more successful if you have a good presence on social media, right, with that, but can you talk a little bit, and I don't know if WWBIC does this, but you know, how to train people to use that or be more successful with a Kiva loan, and how does that work? Like I feel like when you get a certain point, then all of a sudden people outside your network start to fund it, right? So maybe if you could just talk a little bit about that.
Sure. So Kiva is all about social lending, right? There's no credit checks. There's nothing traditional about this type of lending. It really is all social lending. So what happens is there's an algorithm that Kiva has that they work through, but some of the key things, if there is a business plan isn't required, but if there is one, it strengthens the loan. The online presence. So again, this is a global network of lenders. So it's all done through PayPal, but literally, like I have money in Kiva, right? I can lend to our clients right here in Wisconsin. I can turn around and lend to a small business owner in Haiti. It's amazing. The repayment comes back though, and the borrower pays in one lump sum. It's not like they have to pay everyone who's lending to them, but you can literally lend as little as $25. So the social, as far as your visibility online, is really, really important, because you want international, you want everyone throughout the United States to be able to see your profile, to see your story, and to lend to you. And it's amazing when you look at who is lending to our small businesses right here in Wisconsin. But if there isn't an online presence, right, whether that's through social media, website, right, all of that presence, then people can't find the business. So, right, how do you lend to a business that you can't find online when this is an online platform? So that's really, really imperative. What I love about that too, though, is it really does force the entrepreneur to look at their marketing plan, right? To look at how they're being reached and how they're reaching their customer. So it all plays together. But the lending part, depending on the size of the loan, there will be a handful of people that the borrower has to go and ask money for. So again, that social lending aspect, if somebody is borrowing, right, they hopefully have a network that trusts them, that says, I believe in what you're doing, I believe in your vision, I believe you're gonna pay me back this loan. So that social lending is a small portion. The borrower has to go and really get that themselves. Once they get that portion, it goes out to the rest of the world for the rest of the loan. But it all is around that social lending idea.
And is there any training that people can get to create a better profile?
Yes. So I have our training catalogs with us. Sierra is out of the office today, otherwise she would be here. She's our Kiva Access to Capital Manager. So she will do one-on-one. So again, the best success rates are people that really work with somebody on this loan application. The story, the photo, everything through the application, getting to the highest loan amount that the small business owner can get to. But really there's also classes around intro to Kiva, and then also like how do you apply for a Kiva loan. So walks you all the way through. We do all of those Kiva trainings in person and then also hybrid. So if we did an in-person training out here, which again, if there's enough interest, we can always do. We always make sure they're hybrid, so people can reach that training no matter what.
I just have a question, Heather. There used to be a matching program for Kiva loans at certain times of the year. Is that still available?
So it really depends on the business and where they're located. So WEDC has a program for Main Street businesses. So like many of the downtowns throughout the state of Wisconsin are Main Street programs. The match program isn't for the total dollar amount. So say somebody gets approved for $10,000. The match part isn't $5,000. The match part is in that private funding stage. So if they had to find 10 borrowers, let's say, they find 5 and then the match comes in to match that. So it's really just to support that whole, that whole process.
Thank you, yeah, so last but not least, we have Mark Maurer here from WWB, and, as Wes said, they are obviously some similarities there, but, I think it's just good to have, the more options we have and the way we can partner and stuff like that. And I would just comment too that we have a lot of bankers and a lot of people in the room here who are interacting with local businesses, and so our hope here is that some of this you may be familiar with all of us, but hopefully this kind of gets you thinking about some ideas and just sharing it with businesses who might be able to use this. And so Mark, really happy to have you here, and maybe you can also talk about if there are some differences or what you can do differently.
Absolutely.
So
thanks for having me. I'm the last part of the alphabet soup here. I wrote them down: WBD, WWBIC, RCED. Yeah, there's a lot of acronyms in the banking world. We like that sort of stuff. So I am with WBD. At one time, WBD it stood for Wisconsin Business Development, which was short for Wisconsin Business Development Finance Corporation. Now we just like to say it stands for We Buy Drinks. It's a little early for drinks right now, but next time maybe we'll plan
That's how you
accordingly.
get customers, right?
That's right. So as Wes had said, we cross paths, or we parallel each other with the SBA 504 program. And Wes did a great job of summarizing that. It is a loan program that we, as a certified development company, are authorized by the SBA to administer and service throughout the state of Wisconsin. It is a partnership program, so Wes can't, I can't do these a 504 loan by ourselves. We have to partner with the bankers in the group. And the typical structure is that the bank finances 50% and they have a first mortgage or first lien on the project assets. We come in at a subordinate position up to 40%, and that portion of the loan has a below market fixed rate for the entirety of the loan. There are no balloon notes with our portion of the funding. So as Wes said, last month or this month, that rate was 6.05% fixed for 25 years. So it is a good tool both for the bankers and credit union folks to set your customers up with they've got a lot of risks in their world. They've got risks, competitive risks. They've got risk on how do they keep employees. They have interest rate risks too, and this can mitigate some of that interest rate risk. It's a vital portion or piece to, I think, helping structure small businesses and not so small businesses balance sheet. The other part is the lower down payment. You know, if let's use $1 million purchase of a manufacturing facility, and I only use that because it's easy to do the math. Bank does $500,000. We come in at $400,000, and the borrower comes in with $100,000. Their equity into it. In a conventional bank financing, and don't want to speak for all the bankers in here, but I was a banker for 36 years. We're gonna want 20, maybe 25%, and we're going to have that financed on maybe a 3 or 5 year note and payments based on somewhere between 15 and 25 years. And each, when that note matures, we have to get appraisals and so forth. With the 504 structure, we require the lender to have a longer term, 10-year on their first portion. And then of course, as I mentioned, ours is a full term, fully amortizing note. So that is the bulk of what WBD and my cohorts do. The other portion of the WBD kind of mission is we also provide lender services, and that is to the banks and credit unions in the group here. We will do training. We have 2 individuals. We have a SBA servicing group that has, they don't always like saying this, I think it's close to 100 years of experience in the SBA 7A world. So we're talking 504, the 7A for the lenders, that's the loan guarantee program. So you can do, you're doing the loans, or the banks or credit unions are doing the loans, and they're getting a guarantee on those. Now, you have to administer those, you have to underwrite those, you have to follow the SOP, the rules and regulations. And that can, if you do 2 or 3 or 4 or 5 a year, that can be sometimes daunting. So we can do that for you. We have large banks that are what's called preferred lenders. They still offload this stuff to us because we'll do somewhere between 50 and 100 loans a year. That's a lot of repetitions, and we see a lot of different things and nuances. So we kind of take that under SBA underwriting and either assist and buttress what you have. I'm looking at the banks and credit union folks in here, and help leverage that, or we'll do it completely for you. So that's another portion of, and I don't get directly involved with it, although I know Arlene and I, we're talking next week about combinations of where we do projects where we have a 504 and an SBA 7A loan. So by osmosis, I get involved in those sorts of things. The other part, as Heather had mentioned, is our economic outreach. We're a nonprofit, so there's no shareholders here that want a dividend or anything like that. Part of our mission is to support economic development throughout the state of Wisconsin, and we also and state of Minnesota, where we're also licensed. And that's where the WWBICs of the world, where we are involved, and that's been quite a few years. I've been with the organization 2.5 years. Prior to that, in the banking world, and I came clean. But anyway, so those sorts of things are integral to our mission, and they maybe aren't as marquee as the 504 program, but we look at them as being really an integral part about I guess the state of the state, if you will, for developing and fostering small business.
It's huge though, it's huge. I mean, really, I should mention, because through WBD and through that support and other parts, WEDC, WBD, that have really supported Kiva, the state of Wisconsin, other than California, has the largest Kiva loan portfolio in the entire United States. It's huge.
Yeah.
So we couldn't do that without support of, without the support of our partners and organizations.
On that too, I mean, in this, again, the 504 program is a partner program, but in the state of Wisconsin, the number of 504s and the dollar amount is typically in the top 10 in the world, but the nation is the top 10 in the, and that's just because I think there's a good connection with the banks, the support. It's we have a small business bias in Wisconsin, and that's I think is a good bias. So.
No, thanks, Mark. And you got me thinking too about the small business and how we focus. And as an economic developer, you're always trying to. A lot of times you'll try to focus on manufacturing, right? And so, I guess certainly our county does a lot with tourism and smaller businesses as well. So it's like, okay, which things work for the small businesses, maybe it's WWBIC and even our program. But I'm just curious in terms of manufacturing with Wes and you, Mark, how much do you do with manufacturing?
Yeah, I'll say
and stuff?
I don't have I don't have it memorized, but
No,
I have handouts up here. The largest portion of our portfolio is manufacturing because it's a manufacturing state. But aside from that, and I'm sure it's the same with service industries. There's we can get some what I'll call oddball industries like trampoline parks and things like that. And honestly, sometimes those are kind of fun. I mean, don't get me wrong. I think it's really cool going through a manufacturing and seeing something get coated or made or what have you. But some of these other operations that are just kind of not your mainstream. I don't know, Wes, you probably like those too, I'm thinking, right?
Yeah, I'm thinking like rock climbing centers and stuff. I mean, that's another reason we get called a lot is, hotels are super popular in the industry. There's a couple of those around here. It is, from a banking perspective, higher risk industries, weird properties. You'd like to be at a lower exposure on that collateral. So give us a call and you'll be at 50%, just like that.
Right.
No, that's good. So first, I guess I would open up for any questions that you have.
Derek,
Oh, sorry. Yeah. Fine.
can you talk a little bit more about that Elkhorn Economic Development?
Oh,
Alliance
thank you.
Forum?
Yeah, because I'm realizing when Wes said about a grant that I forgot to mention that we have a program that we oversee, and Rob would know that. He's on our Elkhorn Economic Development Alliance board, which is a subsidiary group of WCEDA and focuses on Elkhorn there. Established a building improvement grant program probably 6 years ago, and it's currently really just for the city limits of Elkhorn. We revamped that a little bit recently to increase the amount that could be granted for downtown businesses. But essentially what it does is it's a building improvement grant, so it's more than just facade improvements. I think when I put that list together recently, we had done about 22 grants over the past 6 years. Anywhere from, I think the lowest was maybe 1,000 up to 20,000, which had been the maximum grant award. The way we did it was you could get up to 20%, up to $20,000. So that would mean you'd be putting in 100,000 to get 20. Now that we changed the program a little bit, you can get up to 25%. But essentially it's for facade improvements, but roofing, some structural things that could be an issue, anything that's around energy efficiency. Trying to think what else, Rob, can you think of, but it's fairly easy process, application. We have that on our website, which should be listed there. So if you're in Elkhorn or you have a business that you work with in Elkhorn that might be doing some improvements, it's a good program. It's a reimbursement, so once you get approved and you do the improvements and you submit the paid invoices, then usually within a couple weeks you'll get a reimbursement for that. So yeah, I don't know, Brian, if you have any other specific questions about that. I should say when it first started, there was 50,000 each year that was available for that. In recent years, it hasn't been quite as much, but think 2025, but we're looking to see if we can increase that again, because it seems like now there's some more interest in that program. But it is just specific to Elkhorn. So. All right.
It's a shout out on the revolving loan funds. I know Wes is using, and we have too, where that can count it. We talk about that 10% equity. Often that can count as the equity into the project.
Yeah, that's good. Yeah.
As can the grants too.
Right.
So I just had a question, Derek, for you.
Sure.
Is there ever a situation where you would partner with WWBIC, because that's all the time, right? Good.
Yeah, in fact,
I was
I'm
hoping-
remembering, I think it was when Christine was here, there was a loan that they were doing, and it was helpful because she'd already done kind of the analysis of it and got the applicant to sign off and shared the information, so it sped up. But yeah, we definitely probably should talk a little bit more about that, but partner with each other, with the banks. We sometimes have even done like third position, in terms of collateral, which, usually the banks wouldn't like that, but just to try to get something going and but yeah, if you want to.
And Arlene, because you're on loan committee, thank you for bringing that up, but we love collaborative loans, right? Because it just helps us piece that together in the best way to set that entrepreneur up for success. And I also believe the more you can bring wraparound services to that entrepreneur to support them, the better. So thanks for bringing that up.
Yeah, and the other thing I would mention too, as a banker, as a lender, that the technical services are so great at WWBIC that, we as bankers have to move on to the next deal. We spend as much time as we can, but then to know that WWBIC can be there, and if you bring them in for a smaller portion of the loan, they can still provide such a high level of service. And I've seen that WWBIC piece be the final piece of the deal, of the financing that put the deal together. And we were just looking at it was a very large project, 1.1 million yesterday, lots of grants, big grants, a small bit of WWBIC funding, and then bank funding. And it was just very good and very creative how that happens.
Yeah.
Yeah, and I would just say too, because sometimes when I'm talking about that, and if it could be a startup and they're saying, okay, WWBIC might be an option, but what's the rate? And I hate to say as well, but I will say, they'll say it might be 5 points above prime, which sounds like a lot, and it is, but I always say, what's it worth to have maybe some consulting service, especially if you're starting out? So maybe you could talk a little bit about that too, that sometimes you'll have like an accountant that will help them, or somebody with HR, or somebody checking in to make sure how their cash flow is, and that can be valuable during that first year or two to get them through. And so what's that worth? You're paying the extra percentage, but if those services help you get to a point where then you've got some good history and you can be bankable and get that rate down, sometimes that can offset.
100%. So not only does every loan client get a small business consultant attached to them, but at WWBIC we also have lots of topic expert volunteers. We can't, from a lender liability standpoint, right? Like if somebody needs a CPA or an attorney, those types of things, we can't do that advice. So we have to have those volunteers. So I should do a plug for that. If anyone's interested in volunteering, let me know. But truly, we couldn't do what we do without them, right? So we can absolutely connect the clients even over and above the small business consultant to those experts that will do pro bono consultations and provide advice and coaching.
Now I should say, and we should have brought that, but I think in the follow-up we'll do that, Leslie, but we have a sheet that we had put together years ago, we call it a business mentor network, and I know Heather, you were on that, but it was just some of our partners that can help, like the Small Business Development Center, and I know Taylor, I'm going to call you out there a little bit too. I know we always had somebody from the Innovation Center that was a rep, and maybe you could talk too a little bit about that and some of the resources that are available. I know it's more Whitewater centric, but with
the Innovation Center, for those who have not been there, or for those who have not been there yet, is kind of that middle ground where we have new businesses that aren't necessarily in someone's basement or working out of a shop, but don't have those resources to have that full storefront yet. With that being said, the Innovation Center is a perfect place where it offers all sorts of meeting rooms, conferences, but it also additionally allows them to have that storefront like. In terms of resources, we do have university staff there. We do have Ron from SBDC. We also have marketing staff, all sorts of plethora. We even have a professor that specializes in HR if someone has HR related issues but don't have that full service yet, just because they aren't that big.
And one other thing, Taylor, putting you on the spot, but the university being there too, they have those two centers, right? The FERC and WISC.
Yeah,
Do you
definitely.
want to just mention that too? 'Cause that
FERC
could
and
be a
WISC,
good.
they do all sorts of support when it comes to those small business owners. They provide them guidance on marketing, but they also, but they can also do that economic development study. So if you are having an event or something, or you want to know what the impact would be if you move to a certain spot, they can do that all for you.
You know, and I know I've worked with FERC, and I don't know about WISC personally with our agency, but I know that they've worked with other businesses, and sometimes that's been helpful even to build a business plan for some of these loans that companies are going for. But, you know, there is a cost to it, but I think it's, you know, it's a fraction of what you would pay if you know, a regular business consultant. I think it's really more just to pay some of the students that are doing some of the work, so that can be, those two centers can be valuable resources.
Anything in terms of market studies or feasibility? I remember years ago there was a Bud Gaird, I think is
Oh,
his
yeah,
name.
right.
Yeah, everybody knew. But anything in those lines?
Yeah, I mean, Bud would oversee those two centers, you know, that we're talking about, and the SBDC, so they still are in place and
Okay.
do all kinds of good work through those. So yeah, I thought it'd be good to just to mention it because we're here. But yeah, go ahead.
Yeah, it's for Wes and Mark. You know, the 504, you have both do. I know the government from time to time opens it up for refinance. What's the status of that right now? Are we able to refinance a loan through a 504
Yes.
at this point? Okay.
Yep. Yeah, in fact, there's some pending legislation that's going to broaden that.
Okay.
But yes, there's been some kind of fits and starts over the last decade or so of refinance, and it seems like it is fully in play now with maybe some tweaks going on. There are caveats; it has to qualify, all that sort of stuff. But yes, refinance is alive and well.
So I may go permanent, is what you're saying.
Yeah. Yes, it is.
It
It
is
is permanent.
It is
Yeah.
permanent
Yep.
right now.
Yep.
And I'm glad you asked that. It's on my note sheet. I said,
Right.
as we were talking, I said, oh, we should stress the refi program because not that many people know it exists.
Yeah,
and
that's
it's super
good point.
beneficial.
Good question. Yeah.
We've seen a lot more action on that program in the last year or so. As you know, rates have increased. Folks have balloon notes that are coming up for rate adjustments as they're maturing, and they're getting shocked by that interest rate adjustment. And then again, 90% of the time we run an analysis on, hey, would a 504 structure benefit this? The answer is yes, as long as it's eligible. That's the only criteria, is making it eligible. But if it is, we can recast amortization. That can have a huge effect, and just having that lower rate on the SBA piece, it's
Yeah,
huge.
and refinancing 7A loans that are secured by real estate was a very viable option.
That's right.
Bringing you down to a fixed rate.
Correct.
A much lower fixed rate. That's
Yep.
wonderful solution.
Do any of you do ITIN lending?
Do what? I'm sorry.
ITIN lending?
We do. Yeah, I should share that.
Yeah,
So,
can you
yeah.
explain what that is?
Yeah, so first of all, we have full support for any of our clients coming in who are Spanish speaking. We have outreach specialists. One of our Kiva access to capital managers is actually fluent in 4 different languages. But all of our resources, our trainings, our business planning, our lending, Kiva, Initiate Portal, everything is available in Spanish as well as English, so we absolutely do that lending.
Back on the 504 refi, are the terms required any different than a regular 504? Like you answered one of my questions about like amortization. You said you could recast the amortization, so business owners already own the property for X number of years, but you could still, you know, go back out to 20 years or whatever.
And the bank could keep, like bank's amortization, there's no restrictions on that whatsoever. So, you know, in a refi scenario, if it's, you know, it could be a loan you guys already have on the books. There's additional restrictions that apply there. But yeah, the bank could do a 10-year amortization if they want, and SBA could do a 25-year behind them. It's totally fine. Is that what you're getting at?
Yep. Are there any other items to think about, like, oh, this is different on a refi?
The structure from your perspective is basically the same. The main thing is just that SBA can't lend more than the bank. So in a lot of scenarios, it's possible where, like, if we're doing a refi of $1 million loan, we could split it 50-50 if the value of the property is sufficient. But yeah, there's really not too much that differs in structure.
No, it looks and smells like a, you know, like your purchase or the traditional 504 program.
Any other questions? Just one that if I understand with the 504, you really can't do loans for working capital. Do either of you have any loans that would be suitable for working capital?
Well, yes, yeah. So on the refinance part of, not to get way into the weeds, but there is now just straight refinance, and then there's cash out refinance. So you can take up to currently 20% of the appraised value, and as Wes mentioned, I mentioned, the 504 program is for fixed assets, land, building, and equipment. With the cash out refinance, that up to 20% of the appraised value, that has to be used for eligible business expenses. So kind of just the opposite. So it can be used to pay off a line of credit, it can be used for business expenses, so quote unquote working capital. But on a straight 504, no, it would. That would be in the 7A world that would be using the for working capital. No,
Wes, you don't do 7A, or you do?
If it's in, we do not offer. We have a partner that offers a 7A packaging, kind of similar to what they do. I will just say on the RLF side for us, you know, if you're in Racine County, we've got super flexible RLFs that can play nice behind 504 and alongside them. And with that, if you're not in Racine County, most of the 504 projects in the state are not in Racine County. We're not right here, but reach out to, you know, whatever county economic development organization there is. I don't know how you guys would play behind, you know, within a 504 structure, but there could be an option out there. Like if there's some restriction caused by the 504 program, or, you know, anything within that kind of a structure, see what other local resources are available, because a lot of times
you can also do a 7A 504 combo.
Yep.
Where the real estate is part of that portion of the deal is 504, and then the asset secured piece is 7A, and so those are done all the time.
Yep.
And I think both of your groups do a really great job of putting those together from time to time too.
And that's especially common on like business acquisition projects.
Exactly.
So there'll be $1 million purchase, but only half of it is for real estate. We can do the real estate under the 504 structure, which has better terms, and then the other half do with the 7A. That's a little bit more expensive, but more flexible.
Great, I think we're about at the time. I will be here, so if anybody has questions for any of us, we're here. I have cards, I think you guys have cards and handouts. But thank you again for being here. Thank Harbor Shores for this, and for Simple Food for the food. Appreciate that, and we'll get a follow-up with all this information, a little video too. So thanks for being here, and hope to see you guys soon.